So good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association. And on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon. This is being delivered by Brown Jacobson on the subject of policyholder vulnerability, MGA liability, regulatory risks in relation to vulnerable customers. Before I introduce our presenters, I'd just like to run through a few housekeeping points. So please ensure your microphone and camera are turned off. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen. Time allowing, these will be asked and answered at the end of the session. And just say, no need to wait until the end of the presentation. Send those through. If you think of a question, just type it up, send it through to me. And happy to ask that at the end of the session. If we do run out of time, questions will be answered post-session. This presentation is accredited for CPD points if relevant to your ongoing professional development programme. This briefing is being recorded and a link to the recording will be issued after the session together with our feedback survey. Please take the time to complete our survey, which will take no longer than 2 minutes. This allows us to deliver the best possible future briefings to our membership. So today's briefing is on the subject of policyholder vulnerability, MGA liability, regulatory risks in relation to vulnerable customers from Brown Jacobson. So let me introduce you to our presenters, Jeremy Irving and Janice White. Jeremy has worked extensively on vulnerable customer issues in the insurance markets, and these issues link to the FCA's recent consumer duty and operational resilience initiatives and to the social and governance dimensions of ESG. Jeremy also has wide expertise in regulatory supervision, notifications, whistleblowing, investigations and enforcement on conduct, governance and prudential matters for MGAs and the insurance markets more generally. Janice specialises in regulatory advice for FS market participants, including regulatory expectations on equity, diversity and inclusion, EDI, and the social dimension of ESG, which includes issues regarding customer vulnerability. Janice is also an EDI consultant, helping organisations to introduce or improve their operating environment and culture through the advancement of EDI and to increase the benefits such changes offer to the organisation and its employees, customers and other stakeholders. So without further ado, enjoy the briefing everyone, and over to you, Janice.
Thank you. Just thought we'd start off the presentation by going through some of we hope that you'll take away from this today. So hopefully by the end of the event you'll have an understanding of what makes a customer vulnerable, and in particular the FCA's strategy and tactics around protecting those customers, the potential for different customers to have different vulnerabilities at different stages of the insurance product life cycle. So acknowledging that essentially people can become vulnerable at any point in time and that this can change whilst they are your customer. And then finally, the ways in which policyholders' potential vulnerabilities could affect MGA's existing framework for treating customers fairly. So again, acknowledging that there's an overlap between the various obligations that firms have under the FCA's rules and regulations, with treating customers fairly being one of them. So what is vulnerability? Before we even jump into this, I thought it would be worth us taking the time to have a little bit more of a conversation around the different rules and regulations that the FCA have put out, as I just mentioned, and how they overlap with vulnerability and vulnerable customers. So a vulnerable customer is someone who, due to their personal circumstances, is especially susceptible to harm, particularly when a firm is not acting with appropriate levels of care. That's what's been set out in the guidance from the FCA. But actually, when we take a look at some of the other guidance and rules that the FCA have publicised recently or historically, that there's a number of overlaps between vulnerable customers and what the expectations are there and other areas. So for example, if we look at the consumer duty, oops, sorry, 1 second, just getting my notes up. One of the expectations that the FCA has is that firms should act to deliver good outcomes for retail customers. Now, you would assume that if you have a consumer that is vulnerable, that that would also include acknowledging their vulnerability and making sure that you're taking that into consideration when you're providing products and services to them. Equally, when we look at ESG, there's a lot, although the FCA has sort of focused more on the environmental side of things at the moment, there's a lot more work being done in the social space, and actually the head of ESG at the FCA has recently acknowledged in a speech that he expects that the social side of things will be picking up pace as in the coming months and years, and acknowledge that it's often neglected. So we can see that there will be an overlap between social and vulnerable customers as well. Then if we look at TFC principles, I mean, we're all familiar with these, but they say that all firms must be able to show consistently that they are providing fair treatment to customers, and that it's at the heart of their business model. Again, similar language, a lot of this stuff overlaps. And then finally, diversity and inclusion. So the FCA recently published a consultation paper on how they should promote diversity and inclusion across the financial services sector. And within it, they acknowledged that around half of the UK disabled population are likely to have said that they find it difficult to manage their finances. And then therefore, the FCA feels that firms should have an appreciation of the ways in which different people can be impacted by financial harm, essentially. So I appreciate that it's overwhelming, but one of the reasons why I thought it'd be good to mention it is because, as Tim mentioned, I am a consultant in the EDI space as well. When I look at this slide, and when I looked at the guidance from the FCA on vulnerable customers, nothing came as a surprise to me. And I think that's because I've got myself into a place where it's at the forefront of my mind all the time. And once we get into that mindset, all of this stuff becomes second nature, and you'll start to look at it as one holistic issue as opposed to looking at it in its individual boxes, let's say. So that's why I mentioned this, because I wanted to encourage everybody to start thinking about it as one big thing as opposed to lots of little micro guidances that are overwhelming, because it will help with implementation. So moving on to what the FCA expects from firms with regards to implementation. So they break it down into these 5 categories. Firms need to understand customers' needs. They need to provide their staff with the skills and capabilities to be able to service those needs, develop products and services that are inclusive, and then ensure that customer service is geared towards highlighting vulnerability, and then finally making sure that they're monitoring and evaluating customer vulnerability across the customer journey, but generally in their work. We start off with the first one. So going back to the definition of vulnerability, the FCA defines vulnerability using these 4 characteristics, let's say. And these can include things like, if we're looking at health, a physical disability, mental health conditions, addiction, hearing impairments, but equally with life events, we've also got income shock. So for example, if somebody loses their job or something along those lines, domestic abuse, including economic abuse, so where somebody is using money to control and manipulate somebody. Resilience, so this talks about having low savings, essentially, where people, if have like something that comes up in that is unexpected, their ability to be able to deal with that from a financial perspective. And then we've got capability as well. So this talks about things like poor literacy or numeracy skills, where we know that I think it's 1 out of 7 in the UK has a reading age of between 9 and 11 years old. So bearing that kind of thing in mind when you're producing documents or even having conversations with customers, because we need to acknowledge that we're not necessarily always on the same page, or acknowledging that some people don't have the support or access to help that they might need to be able to understand some of our products and services. So these are the 4 general characteristics, but more generally, I wanted to point out that vulnerability is cyclical. So to the extent that somebody has, let's say, a characteristic of vulnerability, it's also going to therefore cause disadvantage, and then that disadvantage will continue to cause vulnerability. So the FCA says that they expect firms to understand the impact of vulnerability on the needs of their customers and ask themselves what type of harm or disadvantage their customers might be vulnerable to. But actually, when we look at this slide, as I mentioned, it goes round and round, essentially. So if you've got somebody, let's say, who is experiencing, let's say they have a disability and they are unable to understand, let's say, the language used in documentation relating to an insurance service or product. That will then in turn lead to mis-selling, as an example. So if they do not necessarily understand that their product that they've purchased, or they didn't, or it wasn't explained to them well enough in the beginning, that could lead to a claim for mis-selling. But also, I suppose if we're taking an extreme example, could lead to financial issues. So for example, if the person therefore can't manage the product, or it's too expensive for them, that could lead to financial issues, and then they become, again, an extreme example, but bankrupt, and then that in turn can lead to further disadvantage. So you can see how all of these factors can essentially impact one another, and so we can't really look at them in isolation because they all interact with one another. Another one that I really wanted to point out here was bias in data. So the Citizens Advice Bureau recently conducted a study that looked into people's experiences with car insurance, and they tested areas which had a proportion of, or higher proportion of, Black and South Asian people within its population, and they found that customers were quoted at least £280 more for car insurance in those areas compared to areas where the population was largely white. And I'm sure this is something that bias in data generally is something that you're all familiar with, but I think it's something that will be coming up a lot more, particularly from an FCA perspective, when we look at how data can be used as sort of a proxy for racism or discrimination, particularly in insurance services. Some of these other ones may not necessarily apply to the insurance sector. So for example, branch closures, or let's say lack of free to use services, but nonetheless, I think it's important to bear those in mind when you're considering the vulnerability of your customers, because it could impact, let's say, for example, a customer's ability to get to their local branch may impact their ability to pay for an insurance service, let's say, as an example. Just go to the next slide. So here I wanted to talk a little bit about inclusive design. The FCA mentions it within the guidance, but I thought it was important to draw it out because it's only mentioned in a small part of it. And the reason being because, again, I want to encourage people to look at, I suppose, vulnerable customers and issues relating to diversity and inclusion holistically. So when you are even developing a product or a service, making sure that you are thinking about those things from the very outset, and to the extent possible, co-producing products and services with those people in mind. So for example, perhaps having consultation from people from those backgrounds to make sure that there aren't any issues when you're even generating the idea, as opposed to once the product and service has actually been launched. Because often what the case will be is that once it has been launched, people will then go and get feedback on how useful it is, but at that point it becomes a bit too late to be able to do very much about it. So making sure that from the very beginning you're considering inclusive design and factoring that into your product and service generation. And then finally, this is my last slide, and then I will pass on to Jeremy. Nope, that was my last slide. All I wanted to say after this actually was that I appreciate that I've also skipped skills and capability and customer service and monitoring and evaluation as a part of the my slides. But actually, as I said before, I think if we take the approach that we look at these matters holistically, those things will be fleshed out naturally. So for example, if you've got, we're talking about skills and capability as an example, if we're creating a culture whereby people are cognizant of these issues and are thinking of them all the time, and it's constantly raised as a part of your day-to-day business, then the hope will be that somewhere along the line they'll end up being like me, whereby they'll look at something and it will be immediately obvious to them as a part of, even reading a new, let's say, terms and conditions for a new product and service. It will immediately become obvious where there might be issues with relation to vulnerability. The more we learn about how people are made vulnerable as well, the better it will become, or easier rather, I should say, it will become for people to be able to spot these things. Because a lot of I find anyways, the issue with people not necessarily understanding how people can become vulnerable relates to them just not having that personal experience. But if we knew a lot more, let's say, about how people can like barriers can be created by disability in financial services, then again, when we're looking at products and services and the things that we do on a day-to-day basis, it will just become a part of the natural course of business. And finally, one point on monitoring and evaluation. I think it's important to also consider the near misses, let's say. I think when we talk about monitoring and evaluation, we always consider, let's say, complaints data, whether that's like informal or formal. But actually, what I have found with the clients that I've worked with, that there often are a number of near misses or small, let's say, inconveniences or faults in checks and balances, systems and processes that ultimately, when you aggregate them, lead to a big warning signal for customer vulnerability. But because they're not picked up on for being so small over the course of the day-to-day, it's often a chance, an opportunity that's been missed for organizations to be able to tackle it at an earlier stage before harm is done, or at least harm is done in a significant level. So again, bearing in mind these things from a holistic perspective, and even if something seems small, making sure that you're considering the potential for, I suppose, aggregated impact across the board. And I will now hand over to Jeremy to talk about the FCA's approach to vulnerable customers.
Thank you, Janice. Good afternoon, everybody. We've already had a couple of, I think, very, very valid and important questions and observations in the chat from Rebecca Mason. And the first one about documents and the distribution and the ability to control simplicity and accessibility of documentation to potential vulnerable customer cohorts. That's a very important point. I will be coming back to that. On the pricing disadvantage that is linked to postcodes often which have large particular populations with racial backgrounds, particular racial backgrounds, that's something we can come back to. That's linked to a very specific point picked up by the CAB, as Jenny said. But it is a well-known factor that's been thought about for probably 10 years, is when I first was asked to look at it by a client. It does go to this question of bias in data, and that is going to become a more important point, particularly as financial services, as with other industries, looks to rely more heavily on data-driven underwriting and other claims and other systems and controls, particularly around artificial intelligence and machine learning and so forth. That it is the old adage about the quality of data in and the quality of of what comes out. But it is very important to recognise that questions are being raised by regulators and others about the quality of data that is going into insurance and other financial services businesses, and that the regulators and others are looking at how this can be addressed. I should also say that for slight technological reasons, I don't have control of the slides, so I have to, I'm afraid, rely on Jenny's to move them on for me. So Jenny's, if you think, thank you. So this slide, and I appreciate it's a little wordy and not quite as interesting to look at as Jenny's were, but this is sort of really the most essential point to remember when thinking about vulnerable customers as an issue, and also how the regulators are looking to address it and why they are looking to address it. And once you start to think about why the regulators are looking to address vulnerable customers issues, it becomes a lot easier to manage your response, to address your systems and controls in these areas in order to manage your potential risks, the risks of falling foul of regulatory rules and guidance and expectations. So this is just an extract from the Financial Services and Markets Act. and it talks about the FCA's general duties. And as you can see, the FCA has a number of objectives, and I've just highlighted some of them here. But the most important to think about in terms of vulnerable customers is that the FCA itself has an obligation to secure an appropriate degree of protection for consumers. And that is then linked to an obligation that the FCA has to think about a number of things, including the general principle that those providing regulated financial services should be expected to provide consumers with a level of care that is appropriate having regard to their capabilities. So this is a very wide and deep and strong foundation for any initiative around vulnerable customers in particular. So it's important not to think of the vulnerable customers piece as somehow some sort of passing phase, something which might get superseded quite easily or might be forgotten about. This is really quite central now to the way that the FCA is going about its business, and subject to any particular political change which alters the way the FCA is perceived and its statutory obligations. The vulnerable customers piece is here to stay and is likely to expand and become more serious. Next slide, please, Jenny. So again, I'm afraid a rather wordy slide, but I wanted to get on onto one slide, some really key quotes and some links to some really important documents. So vulnerable customers, most people I expect are well aware of, if not familiar with, the guidance from last year, FG 21/1. But there's actually a bigger picture going on here, and I think that this will be helpful to all firms, in particular MGAs, but not limited to MGAs, around the way they approach vulnerable customers on, to use Jenny's phrase, a holistic basis. So there are two particular areas, other areas I'd like people to keep uppermost in their minds when they're thinking about vulnerable customers. And I think the way certainly I approach it is to think of vulnerable customers as part of a sort of trinity, a triangle linked with the consumer duty and operational resilience. Now, I can understand how it's easy enough to say or to discern that vulnerable customers are a sort of subset of consumer and customers and the duties that are owed to them. And that's not too complex. I think what's more interesting and a little bit more challenging potentially, but nevertheless once grasped is of profound significance, is the relationship with the operational resilience initiative and concepts. And I've just highlighted here in this light blue box a quote from the operational resilience paper that the FCA produced again last year. And it really emphasizes how vulnerable customers relate to operational resilience concepts within the insurance market. So we have a motor insurance business which has already taken care to have flags around customer vulnerability, in particular in relation to renewals. And in the FCA's example, the firm has identified that actually a number of its customers are at particular risk, have a particular vulnerability if their renewals are not processed on a timely basis. And so the firm uses this information in order to address that disruption of services concept, which is central to operational resilience. But that addressing that disruption of services is heavily informed, if not primarily informed, by the limits of vulnerability, the limits of resilience, if you will, for those customers who would suffer if renewals are not handled promptly. And so the business in the FCA's example takes steps to ensure that it has that renewals are processed within a day, within 24 hours, and that after that, special measures are put in place because all customers are to be treated as being at risk. So all customers, the point is that all customers benefit from the protections offered to vulnerable customers, or the thinking that has gone into the features of vulnerable customers. And when we're thinking about that triangulation between consumer duty, operational resilience, and vulnerable customers, and when we're thinking about the very profound statutory duties that the FCA has, it isn't hard to envisage a situation where vulnerable customer concepts become expanded, and that vulnerability is something that could, in time, be applied to, let us say, SMEs, possibly to other customers, just in the way that the consumer duty has a much broader spread, much broader impact than just for consumers. But I also think that possibility is real and has crystallized now, at least in the FCA's mind. I was recently acting on a matter and in a discussion with the FCA about the issues around potential customer detriment, and I was looking to explain that in this particular case it was commercial customers were in issue, and therefore questions of consumer detriment, which could have made the matter more urgently pressing for the FCA, were not present. And what the FCA said to me was that wherever there is a firm, there is a consumer at the end of it. And it struck me that there is probably internal communications, possibly even internal training going on at the FCA, which are really looking to highlight how the FCA is no longer looking to put hard dividing lines between marketplaces, wholesale, commercial, retail, and that it is very much looking to look at the entire spectrum, the full connection, direct or otherwise, between financial services, insurance businesses, and consumers. And we can see that has also happened in relation to the issues around general insurance value and reports and comments in reports that the FCA issued before that, such as its reports into the London market commercial markets and distribution, and how that firms which would regard themselves as having nothing to do with consumers may ultimately find that they do, at least from the FCA's perspective. And so I think it's very important for firms to be mindful of this. And I know a number of firms often regard themselves, particularly in the wholesale and the commercial markets, as not having any contact with consumers, and that they would often regard their clients as either their insurers who provide them with capacity, or perhaps the producing broker, or whoever it might be, but some other market professional, some other market participant. But that is not going to wash with the FCA. Your capacity provider, from the FCA's perspective, is not the customer. The customer is the end user of the financial product, and the insurance product in particular. So other big picture items to think about context here. Don't forget Principle 6, obviously, the foundation for treating customers fairly. Remember the other guidance and rules that the FCA has issued in PROD, and then supplementing those which the previous guidance and the requirements on product providers. Think about rules and guidance issued in CISC, particularly where there is outsourcing and interactions with third parties, and this in part goes to Rebecca's very important question around the distribution chain, and we'll come back to that. And finally, ICOBS 2.5A-1, the obligation, the rule that all firms must act honestly, fairly and professionally in accordance with the best interests of their customers. And that itself is really grounds to address this important question around the role of the MGA and the downstream, the effects of intermediaries on downstream distribution, particularly customer-facing distribution. In order to protect oneself against allegations that one is not acting honestly, fairly and professionally, there is, it seems to me, it is necessary to think about monitoring and evaluation, as Jenny's highlighted, by the upstream distribution participants or distributors, and looking at data which is arising from downstream, and looking at data which is arising from customers, looking at data which perhaps might bypass an MGA, which, let us say, it's just as an underwriting role, but the need to act upon and have access to complaints data and claims data. Again, the vulnerable customers initiative from the FCA really demands this complete holistic approach in order to ensure that firms are fully aware of the potential impact they could have on any given vulnerable customer. Next slide, please, Jenny. So we're now into the second learning objective, and I'm going to be looking in a little more detail at the insurance product life cycle. Next slide, please, Jenny. So how does vulnerability relate to the insurance product lifestyle? Well, really, it comes down to this: engagement. It is all about engagement. It is all about the communication. And that falls into two parts: the written word and the spoken word. Obviously, the insurance market depends very heavily on effective written communications. But it is often the case, as various pieces of coverage litigation show, that the written materials are not always fully clear, fully effective, do not always reflect what the parties agreed, sometimes even discussed, and that can often be a wide gap between, let us say, underwriting intention and customer expectations. It is very much worth remembering how the FCA has, over the years, developed insights into the insurance market, general insurance market, and sort of tested its strength, flexed its muscles within those markets. Perhaps most famously in the last 10 years, 10 to 15 years, you have the PPI and the FCA's, FSA's as was, and FCA's later intervention into those markets. But it's also worth remembering that the FCA focused extremely heavily on the business interruption markets during the pandemic, and that it was willing to commence litigation in respect of coverage issues, and that ultimately it was very successful at the very highest level with the Supreme Court judgment. So the FCA has learned a lot from the business interruption market, and the FCA's decision to launch that litigation will have been informed in a number of ways. There will have been complaints made to it direct. There was a very high media profile presence, including social media profile presence for the issues around business interruption. there would have been letters from MPs, there would have been complaints to the Financial Ombudsman, and so on. So the FCA has had a very strong exposure on a particular part of the marketplace and has had reason to look into issues around that particular marketplace of business interruption. And so the emphasis comes back to the market from the FCA and indeed from the Supreme Court, which had a number of things to say about the drafting of policies and to the arguments that insurers were looking to run around that drafting. And the Supreme Court, in effect, it's as a sort of very, very shorthand, would say, well, if it's not written down clearly, then the insurer doesn't have the right. The insurer can't rely upon the provision or the interpretation of that provision that it would like. Other factors that arise out of business interruption, and indeed other products, go to claims forms, the ability to process of consumers and others to deal with often complex documents where it may seem entirely reasonable and rational for the insurance market to ask a particular question or require a particular piece of information or whatever it is, but that to the consumer, and in particular to the vulnerable customer, it is extremely challenging to address that information. Individual questions might be clear and simple, but there may be so many of them that actually a document becomes oppressive and difficult to use. So it's very important when designing documentation, if you're going to have a role in designing documentation, and if you're going to even be thinking we want to be part of a distribution chain, even if we don't have control over that drafting, to understand the ramifications of the drafting, to go out looking for the data around customer responses to those materials, to monitor and evaluate. And this, this phrase will crop up again and again during this presentation, and no doubt in future discussions in this topic. And it's very much about testing and observation. And what I've said there about the written word is just as true for calls and direct handling. Again, a number of businesses may or may not have call operatives as part of their operation. They may outsource that. That may be something which is delivered or handled further downstream in the distribution chain. But it can be crucial, and it can be crucial for vulnerable customers in particular. And it's not just about the content of the call. The tone and the manner can be very important, and the FCA itself, from its vulnerable customers guidance, makes it very clear that a particular vulnerable customer, in this case one with poor health, found it difficult to engage with the insurance market because of the abruptness and insensitivity of call handlers. Now, on one level, this issue is just limited to financial inclusiveness and engagement, themselves extremely important topics and ones which the FCA is looking at heavily, has already done a lot of work on and continues to look at heavily. But this is also goes to questions of, in particular, questions around claims and the ability for vulnerable customers to bring claims effectively and to understand what's being asked of them, to understand what's important to them, what's important to the insurers. And the risk is that if the insurance markets, an insurance market or a particular distribution arrangement doesn't get its claims call center handling arrangements right, that claims which should have been paid may not be paid. And that can lead to complaints, that can lead to regulatory intervention. So it's really important that, however unintentional, no barriers are put up to the ability of a vulnerable customer to bring a claim. Next slide, please, Janice. So looking at the entirety of the insurance product life cycle, what the FCA has had to say is that a vulnerable customer in particular may not understand that something said at the outset when purchasing the insurance product was important to the insurer, or they might not remember that it was important, or they might not remember what was said. I think it's true of commercial and retail customers, insurance customers, that often having bought an insurance policy, even where it's been read in full, and even where that has been understood, and as an aside, I should say, my firm has done some work with the University of Nottingham, which I think identified that you need a reading age equivalent to, or reading skill level equivalent to a PhD student, successful PhD student, in order to understand the number of insurance policies that are in circulation. That it's not recalled in the moment of crisis, that it's not recalled when somebody is trying to bring their claim. And it's also worth remembering that, as Jenny said, a customer can become vulnerable at various times in his or in their life. And somebody who started off as vulnerable, started off as perhaps not as vulnerable, may become vulnerable. And firms need to be alive to that. And again, thinking about lessons from PPI, from business interruption and other insurance products and other financial services products, often, at least from the FCA's perspective, the financial services provider, the insurer, the intermediary that handles the claims in particular, could be the cause of vulnerability or potential vulnerability. So it's important to the FCA, and it should be important to firms, all firms, that they consider how they can continue to gather information about their customer base's attributes, and in particular, whether there are individuals or cohorts with attributes of vulnerability. And the FCA's view, the FCA's guidance, which I've summarized here, is that as many various points within the product life cycle should be used to obtain this and verify this information. So placement or renewal may be at various points in terms of midterm adjustments, claims, and so on. There are substantial opportunities for the insurance market, and MGAs in particular, to undertake monitoring and evaluation, not just of themselves or their counterparties within the distribution chain, but of the relevant customer base, or at least to access the data which others within the distribution chain should be collecting. Next slide, please, Janice. So now I'm going to talk more broadly around adapting existing TCF frameworks specifically to address vulnerable customers. Next slide, please, Janice. Thank you. So, without giving the game away too much, when I've been talking about monitoring and evaluation, really what we're talking about in terms of insurance firm systems and controls is management information and governance. These are the essential things. And it's about setting out to collect the data, analyzing the data, having the data considered at an appropriate, possibly the very highest level, at board level, thinking about what might be missing from the data, thinking about what the ramifications are of the data that exists and the data that doesn't exist, thinking about other gaps in the data and collection methodologies, all the time challenging, all the time the business should be challenging itself as to whether it fully understands potential vulnerabilities within its customer base, and how it ensures that those vulnerable customers are treated fairly. So different areas of information which the FCA is keen that businesses look at. Claims and cancellations. Cancellations claims and cancellations obviously were a vital feature of the business interruption and PPI programs run by the FCA. They looked at that data very heavily. And also details of why customers are cancelling, why customers are not making successful claims, or why customers are making claims which appear to be entirely outside the coverage that was agreed, that was offered. A churn in customers, high turnover. I did, again, I acted on a number of matters, including in relation to PPI investigations in that area. And it was quite clear on some of the call recordings that I listened to that certain markets of customers were being targeted knowingly by those who are involved in selling the PPI, and the FCA has itself talked about this. And then the customer would sort of maybe talk to someone and or maybe have a second view and would change their mind. So these cancellation rates and this churn in customers is a really key determinant from the FCA's perspective around indicators of vulnerability. Similarly, products and pricing, particularly around current and legacy business. Again, this is very strongly linked to the work that the FCA has done in terms of general insurance value.
We lost you for a little bit there, Jeremy.
Oh,
you're back now.
I'm back. Okay. So yeah, I was just saying that current and legacy products and pricing is a key area. It's linked to the general insurance value work which the FCA has already done, and it's very important for firms to understand who is paying what in respect of products with which they are involved. Are they paying more? Are the terms disadvantageous, potentially even if customers are not paying more? Again, this goes to this point about risk bias, bias risk in data, I should say, for different customer cohorts. Next slide, please, Jenny. Practical considerations within firms' TCF frameworks. I think a key factor, and this is going to be particularly true for perhaps the smaller and mid-size MGAs, is whether they have their own resource. Do they need to start thinking about getting external resource to help them, perhaps in helping them design the questions they should be asking about their distribution partners, their capacity providers, just to get the concepts off the ground, and then to think, is there a way? Do we need help in interpreting data once we get it as part of our monitoring and evaluation process? Training and competence records are very important. Jenny's previously mentioned the significance of what otherwise might not be treated as significant data. So feedback which doesn't necessarily amount to a complaint, feedback from staff members and personnel. Again, it might not be as formal as whistleblowing or a request for escalation or something more formal, but little bits of data can contribute to a bit bigger picture. And this sort of much broader, much finer mesh of data sifting, gathering and sifting, the FCA is keen to see firms undertake. File reviews and call monitoring, I'm sure that goes on in any event, but it's the lens, or perhaps in the case of call monitoring, the the audio, the earpiece, which you need to change. You need to attune your processes, whether it's checklists or however else it might be done, to think about information that's coming out that can be gleaned from call recordings. And this goes to the point I made earlier around tone, the speed of the conversation, the potential aggression or non-receptiveness of the call operator. What effect could that have, even aside from identifying situations where people are ringing off or not being willing to engage? Next slide, please, Janice. Janice has already mentioned the importance around customer feedback, and I just emphasize again there in a nice bright color the issue around employee observations and the ability for firms to gather data, start to build up and work out what questions they might need to be asking from their own employee observations. Social media being a key area there. Complaints is an obvious area, but don't be shy necessarily of being willing to undertake some root cause analysis. It may well be that as time goes on in relation to vulnerable customers and the customer duty, that the FCA will have much higher and heavier expectations on firms to be more proactive around root cause analysis. And those firms, I think, which are willing to embrace that are more likely to arm themselves with the systems and controls which means they can demonstrate, on demand to the FCA how effective they are at looking after the interests of vulnerable customers. And compliance reports, these should be developed in order to pick up all of the data that we've been talking about here, all the different aspects, the complaints, the feedback, the social media and so forth, and to make sure that this is escalated and considered at the right level so that the firm can make very clear what the best possible informed decisions on how it proceeds in the materials it produces. Next slide, please, Janet. So we're at 5.2. Hopefully you will come away from this with these learning objectives being met. Janice and I would be delighted to talk to anybody who wants to, or to answer questions by email around these objectives. And it may be that you don't, that there's been a lot to take on board and that not everything can be processed at this point, but hopefully once you have access to the slides, and I think there's going to be a recording available via the MGAA, it will become, you will find that helpful in shaping your thinking in this area.
There are a few questions in the chat that
yes,
time to address, if that's all right, Jeremy. If I stop sharing the slides. So let me turn to the first one. So I was just typing out a response, actually, I think to what point was this on? How firms will monitor insurers with respect to racism and prejudice. So I think one of the ways in which the FCA will monitor it is via this vulnerable customer guidance and the consumer duty guidance and all the others that I mentioned before. So as an example, if customers who are vulnerable may also be protected under the Equality Act, as an example. So if somebody's disabled, or if they are experiencing mental health issues or any other long-term health condition that impacts them for more than a year, which would qualify them as disabled under the Equality Act, they are vulnerable but also disadvantaged in respect of their disability. And so if any product or service or any behaviour by a firm would disadvantage people from those backgrounds, the FCA will consider it a breach of their rules and will seek to use, any and all of their enforcement powers to rectify it. I think the FCA will definitely be looking to build capacity in this area as we move forward, because ultimately it's a new area to regulate, right, in some respects, and it will require expertise. So we've seen recently that the FCA has recruited for its ESG committee. I think that, things like that will continue to grow. They've done the same thing, I think, in their diversity and inclusion space. And as they develop more expertise and I suppose, as I said, capacity to, I suppose, not just supervise these things, but also develop their own understanding of these things, we'll see, I think, more enforcement coming from them as we go on. The other question that I just wanted to address was with respect to the CAB research. I think somebody asked, is it more about class as opposed to race? And I think this is where intersectionality becomes important, because for those that don't know what the term means, it basically is a concept that describes how somebody can be impacted by a number of different characteristics, let's say. So for example, if you are from a working class background, you will face disadvantage by virtue of that. But if you are, let's say, black and from a working class background, your disadvantage is compounded by the fact that you have two areas in which you're experiencing disadvantage. So in the case of the CAB research, that would be an example of where, as it says, all people within that area will be affected by the price differences. But when we look at the differences between how, let's say, nationally, people from ethnic minority backgrounds are treated compared to white people, that people from ethnic minority backgrounds will be more significantly impacted by it, because they are more likely to live in those types of areas. So hopefully that should explain that point. But equally, if intersectionality is a subject that is new to you or to anybody, I highly encourage looking that up, because it does a lot to explain, as I say, how these things can become compounded. But that said, I do think there is a that social class in particular is something that is not as well looked at in the EDI space. Let's say poverty as well, experience of poverty isn't something. It's an area that people often neglect as a part of EDI, and is certainly one that I'm always key to highlight wherever it comes about in conversation. Jeremy, we had another question about distributors having SLAs for call centers with regards to servicing as well as sales, and asking what is reasonable. I don't know about you, but I certainly think that would be a good idea. And first things that came to my mind was thinking of having different ways of being able to contact an organization. So you're taking into consideration people's differences, whether that's because they're time poor. So for example, I find a lot of servicing lines are only available between the 9 to 5 hours. But what if you're, in a job that doesn't allow for, daytime phone calls, or you need to, be able to speak to somebody over an evening or via a message instead of a phone call. Thinking about ways in which we can, I suppose, make that more accessible would be the first thing that comes to my mind. What do you think, Jeremy?
Yeah, I agree. So the answer is, yeah, the entirety of the relationship must be thought about in the way it's conducted. The manner of the conduct must be thought about, not just at sales. So Rebecca's question is absolutely right. I think unfortunately she's had to leave, and I think others may well be wanting to leave as well. But there was a further question from Oliver Lawton. Refusal to sell products to VCs. That's a really interesting question, and is a challenging issue, because it does go to this question of financial inclusion or exclusion. And I think the answer to it is there is more work and analysis to be done around this at a regulatory level. But from a firm's point of view, what it needs to identify is does a customer have characteristics of vulnerability which mean the product is inappropriate for that customer, for the risks it faces, or not. If the risks the customer faces are appropriate, if the product is appropriate for the risks the customer faces, then what the firm should try to do is enable that customer to purchase that product, but on a fully informed basis, and without risks of failing to understand what the product really involves and what the processes are. So I think the regulators, the way the FCA will look at this, is that the vulnerable customers piece should not become a step towards financial exclusion or financial services elitism or whatever it might be, but actually this is an initiative to bring more people in to give them the benefits of the financial services markets.
It would go to flexibility as well, wouldn't it? They mention a lot in the guidance that firms need to be flexible in terms of when they're providing their services and, making accommodations for people, but equally making sure that you have a breadth of services that is able to service everyone. So if one particular product or service doesn't suit a vulnerable customer, making sure that there is one that will, essentially.
Yeah, absolutely. Now, I don't know if Tim wants to take back the control now, because we're just past 2.
Well, indeed, yeah. Thanks very much, both. That's really useful, really helpful. And just to say that if anyone does have any further questions, don't hesitate to either send them through to Janice or Jeremy or indeed me. So my email address is tim.richards@mgaa.co.uk, and I'll happily forward those on. So yeah, it just remains for me to say thanks both for your presentation today. I think everyone will agree it's been extremely helpful in understanding regulatory risks for vulnerable customers. Thanks to everyone for joining us. Please don't forget to provide your feedback and do look out for forthcoming MGAA events. Hope you have a productive afternoon. Thanks for joining us and see you all again soon.